All right, so imagine this. You get a punch card.
Okay.
But instead of, free lattes, it's got all your investment decisions for life. Like every decision you make is a punch.
Mm-hmm.
And you only get 20 punches total.
Oh, wow.
Would that change how you think about picking stocks?
Yeah, I think that would definitely change my thinking.
Yeah, it makes you think long term, right? And that's just one of the many things that we're going to unpack today as we deep dive into the financial wisdom of Warren Buffett.
I love that analogy, that punch card analogy. It really kind of gets to the heart of his approach. It's like every decision really matters.
Exactly. And it's not just limiting the number of trades, but the conviction behind each one.
Right.
We're pulling these insights from an article called Warren Buffett's Most Indispensable Financial Advice. And believe me, it lives up to the name. Whether you're just getting started or a seasoned investor, I think there's something in here for everyone.
Yeah, that's what's so fascinating about Buffett, right? He can kind of cut through the Wall Street jargon and really just lay out these simple principles that apply to pretty much anybody.
Okay, so let's start with one of his core principles, avoiding losses. He famously said, and I quote, "Never lose money, and never forget to never lose money." Even the repetition feels like a warning or that.
Yeah, it's more than a warning. I think it's like the cornerstone of his whole investment philosophy.
Okay.
Think about it. If you lose like 50% on an investment,
Right.
you need 100% gain just to get back to where you started.
Uh-huh. Yeah.
So it's preserving capital is about recognizing that every dollar you lose is a step backwards.
So before you even think about making money, you've got to master not losing it.
Exactly.
Okay, so once you have that kind of mindset in place, how do you choose what to invest in?
Well, that's where Buffett's distinction between wonderful companies and wonderful prices comes in. He's really emphasizing that you shouldn't just chase a bargain. Look for the cheapest thing out there. You got to prioritize, finding a truly high-quality business.
So it's not just about finding a stock that's cheap. What makes a company wonderful in his eyes?
Well, he's looking for companies with what he calls a durable competitive advantage, a moat.
A moat, okay.
Yeah, think of a moat, like around a castle, right?
Protecting it.
Protecting the riches. This could be, a strong brand name.
Okay.
A unique technology.
Right.
A really loyal customer base, maybe super efficient operations. It's about finding businesses that can withstand the competition and continue to thrive over the long term.
Yeah, it's that longevity, right? Like buying a trendy gadget that's going to be obsolete in a year versus a classic piece of craftsmanship that's going to hold its value.
That's a great way to put it. It's about understanding the long-term potential.
Exactly.
Buffett often uses the analogy of buying a house. You wouldn't just buy the cheapest house on the market.
Right.
You got to consider, the location, the structure, the potential for appreciation.
Right. It's the same with companies.
Okay, so we found those wonderful companies. But even the best businesses have their ups and downs, right?
Of course.
How does he navigate those market fluctuations?
He really sees downturns as opportunities to buy.
Okay.
This is where that famous quote comes in. Opportunities come in frequently. When it rains gold, pull out the bucket, not the thimble.
Okay.
He's really known for being a contrarian investor, meaning he's going against the crowd a lot of the time.
Yeah.
Doing the opposite of what everyone else is doing.
And that reminds me of something we were talking about earlier, like the emotional side of investing, right? It takes discipline to not panic when everybody else is.
Absolutely. Temperament is huge for Buffett.
Yeah.
He's famously said, be fearful when others are greedy and greedy only when others are fearful,
Yeah.
It's about having the emotional control to stick to your strategy even when the market is going crazy. But that goes against our natural instincts, right? Like when we see those prices dropping, we want to sell, we don't want to buy.
Yeah, most people do, yeah. That's why Buffett compares the stock market to a no cold strike game in baseball.
No cold strike game, okay.
A batter doesn't have to swing at every single pitch.
Right.
They can be patient and wait for that perfect opportunity.
So it's not about constantly buying and selling all the time.
It's about being selective.
Yeah.
And only acting when you see, a truly compelling opportunity, one that aligns with your goals.
Right. And this kind of makes me think of that 20 punch card analogy again.
Yeah.
If you only have a limited number of choices, you really got to be discerning about each one.
Yeah, exactly. It really forces you to think through your decisions and avoid those, impulsive moves.
Okay, now this All of this makes sense for folks who have the time and the expertise to research stocks.
Right.
But what about folks who don't? What about everybody else?
Yeah. Well, Buffett's actually given some very specific advice for them.
Okay.
He's a big proponent of dollar cost averaging into index funds.
Now, for the listener who might not be familiar with those terms, could you break that down for us a little bit?
Absolutely. Dollar cost averaging just means investing a set amount of money at regular intervals.
Okay.
Whether the market's up or down, you keep investing.
So instead of trying to time the market, you're consistently putting money in.
Exactly. And an index fund is basically a basket of stocks that track a particular market index, like the S&P 500.
Okay.
So it's a way to diversify your portfolio, get exposure to a lot of different companies without having to pick individual stocks.
Right. So it's a much more hands-off approach, but still rooted in long-term growth.
Absolutely. And this brings us to another one of Buffett's kind of key principles.
Okay.
He emphasizes it's not about constant trading.
Right.
It's about making informed decisions that lead to long-term gains. He said, you don't get paid for activity, you get paid for being right.
It's not about winning every trade, it's about winning the overall game.
That's a great way to put it.
You have a strategy and you stick with it.
Right. And this brings us to another important point.
Okay.
Building a resilient portfolio.
Okay, let's talk about that. What does he recommend for those inevitable market storms that come along?
He has this vivid quote that I always think about.
Okay.
After all, you only find out who is swimming naked when the tide goes out.
Oh, wow. That's a powerful image.
Yeah.
What does that mean, like in the context of investing?
It means, market downturns are going to happen.
Right.
And when they do, the people who haven't built a solid foundation,
Right.
the people who've taken too much risk, they're going to be exposed.
So it's not just about picking the right investments. It's about understanding, how much risk you can handle.
Exactly.
And building a portfolio that can withstand all that volatility.
Yeah, it's about having a long-term perspective, diversifying your holdings, avoiding too much debt.
Okay. So we've covered a lot of ground already. Avoiding losses, finding those wonderful companies, staying disciplined during all those market swings, and building that resilient portfolio. But there's another layer to Buffett's thinking that I find really fascinating, and it's that he's deeply rooted in this idea of value investing.
That's a great observation. And it leads us perfectly into the next part of our deep dive.
Okay.
We're going to explore what value investing really is.
Okay.
And how it informs everything from stock picking to even just making decisions in our daily lives.
Perfect.
Yeah.
Well, let's take a quick break and we'll come back and delve into that.
Okay, so we've talked about how Warren Buffett is like all about finding these wonderful companies.
Right.
But he doesn't just buy any great business he can find, right? He waits for the right price.
Exactly.
And that's where this whole idea of value investing comes in. And I got to admit, I've always found that term kind of vague. Like, what does that actually mean? Yeah, it's definitely a concept that gets thrown around a lot and often misunderstood. People hear value and they just think cheap.
Right.
But it's much more nuanced than that.
Okay.
Value investing in Buffett's world is about identifying companies that are trading for less than what they're actually worth, what their intrinsic value is.
Okay. Intrinsic value. There's another term that we got to unpack a little bit.
Yeah. So intrinsic value is essentially like what a company is truly worth, based on its assets, its earnings potential, its future cash flow. It's kind of like, if you're buying a used car.
Yeah.
You're looking under the hood, you're checking the engine.
Right.
You're looking at the mileage, you're assessing its overall condition.
Right.
And you're trying to figure out, is the asking price actually a fair deal?
So value investors are kind of like those savvy car buyers who can spot a hidden gem.
Yeah, that's a great analogy.
A car that's maybe been, undervalued by the market for whatever reason.
Yeah, they're looking for those diamonds in the rough. Companies that the market might be overlooking because of, short-term factors or just misperceptions about the business.
And so they buy it at a discount, hoping that eventually the market will sort of, recognize its true value.
Exactly. But here's the key. Value investing takes a lot of patience.
Okay.
It's not a get-rich-quick scheme.
Right.
It's about taking that long-term perspective.
Right.
And trusting that over time the market will accurately reflect what a company's actually worth.
And that goes back to what we were talking about before, like the emotional side of investing, right?
Right.
It takes discipline to sort of stick to your strategy and not get spooked when things go down.
Absolutely. Value investing is all about having the conviction to hold on to your investments. Even when the market might be telling you otherwise. Now, I know what you might be thinking. Okay, well, how do I actually find these undervalued companies?
Right.
How do I separate, the true gems from the fool's gold out there?
Yeah, that's the million-dollar question. It sounds like a lot of research and analysis.
It does. It does. But it's not as daunting as it might seem. A good place to start is to look at a company's financial statements.
Okay.
Analyze their earnings reports.
Mm-hmm.
Try to understand their industry, their competitive landscape.
So it's not just about picking companies with, names you recognize or products that sound trendy.
Right. It's about, going beyond the surface.
Yeah.
And really trying to understand the underlying business.
Okay, so how do you do that?
Well, are their profits growing? Do they have a solid management team? Are they adapting to changes in their industry? These are all key questions to ask.
Yeah, that does sound like a lot of work, but I guess it's worth it if you find those gems that other people are missing.
Right. And remember, we're talking about building wealth over the long haul here.
Yeah.
So it is an investment of your time and energy, but the potential rewards can be significant.
Yeah.
And for those folks who don't have the time or the expertise to do all that research themselves,
Right.
there are resources out there.
Like what kind of resources? What are some tools or strategies that people can use to sort of dip their toes into this whole value investing thing without, becoming a full-time analyst?
Yeah, there are websites, there are newsletters that offer insights from experienced value investors. There are also, mutual funds and ETFs that focus specifically on value stocks.
Okay.
So that allows you to kind of benefit from the expertise of professional portfolio managers.
So you don't have to go it alone. You can sort of, take advantage of other people's knowledge.
Exactly. And remember, even if you're not, actively picking individual stocks,
right,
the principles of value investing can still inform, your overall financial strategy.
So what do you mean by that? How can we apply these principles like beyond the stock market?
Well, think about it. When you're making any major purchase,
okay,
whether it's a house or a car or even just like, vacation,
right,
you should be asking yourself, am I getting good value for my money here? Are there hidden costs that I'm overlooking?
So it's about looking beyond just, the sticker price.
Exactly.
Assessing, the long-term benefits and making sure you're not overpaying for something that might not, hold its value over time.
Exactly. Value investing isn't just a stock picking strategy.
Right.
It's a way of thinking, a framework for making sound financial decisions in all aspects of your life.
Yeah, that's an interesting way to look at it. It's about making choices that really align with your goals and your values, whether you're buying a stock or a new sofa. Speaking of aligning with values, there's a quote from Buffett that I really like. He said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price."
I love that quote.
Yeah.
That really just sums up his philosophy. It's not just about finding a bargain.
Right.
It's about recognizing that quality matters.
Yeah. Sometimes, paying a little bit more for a truly exceptional company can be the smarter move in the long run.
Absolutely. And that brings us to another really fascinating aspect of Buffett's wisdom.
Okay.
His emphasis on long-term thinking.
Yeah.
He's famously said our favorite holding period is forever.
Okay, now we're moving from value to eternity. I mean, most investors are thinking in terms of quarters, maybe a few years. Like, what does he mean by holding on to a company forever?
Yeah, it's about thinking like an owner, not a trader. It's about investing in companies that you really believe in. Companies that have, a strong foundation and a bright future. Yeah. Companies that you're willing to hold on to even when the market gets bumpy.
So, find those companies that you'd be proud to own.
Yeah.
Companies that you think are making a positive impact on the world.
That's a great way to put it. And this long-term perspective influences everything he does.
Yeah.
from his stock selection to his company culture.
Hmm.
You know, he's not chasing those quick profits.
Right.
He's building a legacy.
And that's a very inspiring way to think about investing. It's not just about, making money. It's about being part of something bigger.
Yeah.
Something that creates lasting value.
Exactly. And this leads us to another key aspect of Buffett's approach.
Okay.
The importance of aligning your investments with your personal goals and values.
I love that idea that your investments should reflect what you care about. It makes the whole process, I don't know, just less transactional and more meaningful somehow.
Absolutely. You know, it's about recognizing that investing isn't just about making money.
Right.
It's about supporting companies and causes that you believe in.
Yeah.
It's about, making conscious choices with your money.
Uh-huh.
Choices that reflect your values and contribute to the world that you want to see.
Absolutely. And Buffett himself is a great example of this.
Yeah.
He's known for investing in companies that he personally admires and uses.
Yep.
Companies that he believes are making a positive difference.
So it's not just about the numbers.
Right.
It's about finding those investments that feel right, on a deeper level.
Exactly. And that brings us to another key aspect of Buffett's approach.
Yeah.
The importance of aligning your investments with your personal goals and values. Yeah, this idea of aligning investments with personal values just really resonates with me. I think it really makes the whole process feel, less transactional and more meaningful.
Yeah, it's amazing how much he kind of brings his own values into his investing style. It's not just about the return. It's like these companies, reflect what he believes in.
Right. Right. And I think that's a really important part of his, long-term approach. It's about investing in companies that he understands and admires.
Yeah.
Companies that he'd be proud to own.
It makes you kind of wonder if we brought that level of intention to all our financial decisions, like, would we feel more connected to the outcomes?
Absolutely. Yeah. I think it shifts the focus from, just pure profit to a more holistic sense of value.
Yeah.
It's recognizing that our financial choices have these ripple effects, not just on our own lives,
right,
but on the world around us.
Yeah. Okay, so let's bring this back to our listener for a second.
Okay, we've covered a lot of ground here, from avoiding losses to finding those wonderful companies, from staying disciplined during those crazy market swings to embracing this idea of value investing. Like, what's the one key takeaway you hope our listener walks away with?
I think the most important lesson we can learn from Warren Buffett is the power of long-term thinking.
Okay.
It's about resisting those short-term impulses.
Yeah.
And focusing on building a solid foundation for lasting wealth and financial security.
It's like that famous quote of his, someone sitting in the shade today because someone planted a tree a long time ago. It's about playing that long game, not just with investing, but in all aspects of our financial lives.
Absolutely. Yeah. Whether it's, saving for retirement or paying down debt or investing in your education, it's those consistent disciplined actions over time that ultimately lead to the greatest rewards.
It's about delaying gratification. Right.
Right.
Recognizing that true wealth is built, not stumbled upon.
Right.
It's about making those choices today that will set you up for success, years down the line.
Absolutely. And that brings us to another really crucial element of Buffett's kind of approach.
Yeah.
He's a big believer in aligning your investments with your personal goals.
So it's not just about picking stocks that are going to go up. It's about choosing investments that are going to help you achieve what you want in life.
Exactly. Are you saving for a down payment on a house?
Yeah.
Are you building a college fund for your kids?
Right.
Are you planning for a comfortable retirement? Your investment strategy should be tailored to those specific goals.
So it's not one size fits all. It's about understanding, your own situation.
Right.
And making choices that will help you get where you want to go.
Exactly. And remember, your goals might change over time. And that's okay.
Yeah.
The key is to regularly reassess your investment strategy.
Yeah.
And make adjustments, as needed to kind of stay on track.
Yeah. This reminds me of what we were talking about earlier, like being adaptable,
Right.
And kind of responding to changes in the market and in your own life.
Yeah. Yeah. It's about, having a flexible mindset and being willing to adjust your course as you go. As we kind of wrap up this deep dive into Warren Buffett's financial wisdom, I want to leave our listener with one final thought.
Okay, what's that? What's the parting wisdom from the Oracle of Omaha?
If you had to choose just a handful of companies to invest in, companies that you believe in,
Okay.
companies that you think are going to thrive over the long run, which ones would you choose and why?
Hmm. That's a good question. That's a really good question to think about. It kind of makes you, really think about what you value both financially, but also personally.
Exactly.
Right.
Exactly. And by applying that same level of, thoughtfulness and intentionality to all your financial decisions,
Yeah.
you can really create a path toward a more prosperous and fulfilling future.
Yeah. I think that's a great note to end on. Remember, investing isn't just about numbers. It's about making those choices that align with your values
Right.
and your vision for the future. Thanks for joining me on this deep dive, everybody. We'll see you next time.
Thanks.